Hello, everybody. Welcome to Thursday. The S&P 500 was down 0.8% today. Had some changes in the signals, still greens on the stock, but we're both red, fast and slow on the bond now. Really has to do with what happened today. So the S&P comes down because the jobs report came out from ADP. This is the private jobs report. 479,000 new jobs created in June. That's the best since last June. And service sector was leading the way there, which is to be expected because that's where we're all spending our money now. And that creates a scenario where there's some fear that the Federal Reserve will be raising rates more. And of course, that affects the price of bonds. And so the price of bonds comes down in that environment. And here's what I think is very fascinating. Inflation is being caused by higher demand because people can get out and do things, especially in the service area, and shortage. And the shortage in the service area is labor for the most part. And so when you create more jobs, we're getting more people in to bring that shortage of labor down, which could help to ease the pricing, power that's happening on the service side. So I actually see this as a good thing. I've said this before. We've had a couple of these big job reports. Market comes down, and the market's up higher and higher all the way since last October. And so you have to take a look at that and see, what's really going on here. There is some fear here that the Federal Reserve will continue to raise rates too far, and we would end up with some type of a hard landing recession. And this gives the Fed more room to move with rates because they have a dual mandate, full employment plus lower inflation. And so they see this as, hey, employment's great. We can raise rates a lot. So we'll see what happens there. That hasn't happened yet. It does push the concept of recession even further away. And assuming things continue along this path, we could end up with the same type of scenario we're now, which is really kind of a soft landing scenario where the economy isn't spectacular, but it's still growing, and we're certainly beating expectations. That seems to be such a common scenario right now, that the expectations are really just low from all of these different groups, and things are much better than was projected. So tomorrow is the big jobs report from the Department of Labor. We'll see how that turns out, see how the market reacts to that. But I wouldn't see this as a terrible day today. The market actually was down more and then came back. I think there's others that see the same thing. The main thing here, and I mentioned this at the show last Friday, that I thought the main issue was going to be inflation, not the recession. I think the recession is going to be pushed off. My gut feel was that things were getting pretty hot altogether across a lot of the categories when you look at what's happening economically. And I think we're going to be talking more about inflation and the Federal Reserve's, potential rate increases. And this job report just kind of drives that home. Again, the Fed has to overdo it to create problems. If they're behind, the economy still grows. So, we'll have to see how this plays out. I don't see this as a bad thing. So we will talk about what happens with tomorrow's job report on my show tomorrow live. Talk Money with Tom, 12:15 to 1 o'clock on YouTube. You look it up. And you can join us, and look forward to any questions you want to send in live. We'll try to answer those also. And I do a summary at the beginning of that show of what I saw happening with the stock market. So look forward to seeing you then. Thank you very much.